Last night, Steve Liesman told us the Federal Reserve is contemplating pausing its interest rate cuts. A lot of that depends on economic data. But now, Steve tells us the Fed will be watching corporate earnings and what they tell us.
The Fed has a data problem. It's meeting in under 2 weeks, but several critical economic reports like the jobs report and closely watched surveys of manufacturing and services don't come out till after the Fed issues its decision. What's the Fed to do? In this case, it might want to watch corporate earnings more closely than normal. Next week is the peak of earnings season, with more than a quarter of the S&P 500 set to report. Earnings from household names like Ford, Caterpillar, McDonald's, and Amazon. They can help the Fed answer two key questions. First, has the U.S. consumer remained strong despite a broader economic slowdown? And second, how much is the trade war hurting companies and leading investment to be cut back?
Business fixed investment has slowed notably since last year. Exports are contracting on a year-over-year basis, and indicators of manufacturing activity are weakening. Global growth estimates continue to be marked down, and global disinflationary pressures cloud the outlook for U.S. inflation.
Fed Vice Chair Clarida said Friday that the Fed is making decisions meeting by meeting. There's some chance the Fed pauses in cutting rates at the October meeting, or more likely after it cuts one more time. Compounding the Fed's trouble in setting rates, Presidents Trump and Xi could meet in Chile 2 weeks after the Fed meets to hash out trade, and the outcome is uncertain. So the Fed has a data problem, and earnings can provide some help. But there's no help in figuring out what the two presidents will decide on trade, and that's arguably the most critical issue affecting the outlook and where the Fed should set rates. For Nightly Business Report, I'm Steve Liesman.